Good morning, everyone. Good morning. Cheapers, I can't believe it's the 9th of April already. I just feel like this year is just burning through it. So I'm going to do a scan very quickly. I've set up a 15-minute chart on the left side and a daily on the right-hand side. So really it's just to get a sense of what's going on here. I started with the NASDAQ just to get a sense of what's going on with the indices. This is a very key level. Okay, so this is a very key level. So price, if price does end up breaking higher, at least in terms of the US indices, then we're likely to see a higher recovery. So I think that this level is key enough for us to get a sense of kind of what's happening. And it's interesting to see this very strong reaction against that point in space. There's very little divergence. So I couldn't really find any technical indicators that there was a reason to reject it, other than the fact that there's just a lot of sales there. So let's just run through a few of these. So let's have a look at the Dow. The Dow, of course, having a big knockback as well. So it's really about that key level today. If we stay below that, we're likely to see the markets kind of head low. And then there might be some really nice trends to the downside, and then opportunities on those 15-minute, 30-minute, 1-hour timeframes. So that's the S&P. NASDAQ, if we go ahead and have a look at the FTSE, it'll be the same thing. You can just see a very strong knockback back into now support. There's a key level here as well. So if we break through these levels before the US session comes online, it's not impossible that we could see a down day, and then there will be some opportunities there at least. And I say the 15-minute time frames because that's really where you get the market's moving so quickly. That's kind of the only place you really can. And actually my personal preference is trading the US indices, then the DAX, then the FTSE. And really it's because the DAX has got about 30 times, it's about 30 times bigger than the FTSE. It's got a lot more liquidity. But yeah, there are differences in terms of contract sizes, so that can impact things. But I prefer that. I think the FTSE can often be too volatile. Right, so that's really the look on that. Going through to oil, so we want to get a bigger picture idea of what's happening with oil. I'm still bullish on oil up to these levels here, sort of towards the $42, I think is a relatively realistic expectation. So that would put me, especially when I start to see high lows, high highs, then I might be looking for entry opportunities on that. If I see any of those and I'm at my desk, I've got a lot of other stuff going on at the moment. Just writing a book, and I have meetings and calls and blah blah blah. So if I don't get the time, that's why. But yes, looking for Brent trades. These are looking nice and bullish, and entry opportunities on 15 and 30 minutes looking good. 5 minute for me is just a little bit too choppy, so 15 minutes I quite like. Cocoa, okay, I'll skip these because not everyone has them. I just want to have a look at the US dollar index. Still wishy-washy, swinging around. Basically what it's doing is staying around the 100. That's really what it's kind of doing. It'll go away from it, come back, go away, come back. It's just kind of swiveling around that level. So I'm going to ignore that and have a look at some of the other charts. GBP was a little bit better. It's actually looking a bit more bullish here. If we can break through that 1.24 level, then it makes sense to see that climb higher. We've got Aussie dollars. I'm keeping an eye on these mainly because of their weekly retracements back up, but they've still got some room to go. So basically for today, moves to the upside are acceptable. What were the other ones that I quite liked the look of? So some of these other ones, in terms of things like pound Swissy, was it pound Swissy had a really nice potential weekly retracement coming back up into these key levels. So on the way up, there might be shorter term opportunities there. The Aussie pairs also, they have the same kind of thing going for them. They're all coming into these key levels. Aussie yen was one of those for sure. If I look at that, a pullback into these moving averages, into these key levels. So shorter term moves to the upside looking good, but on a weekly my expectation is for them to come up and then resume the trend to the downside. But I don't think that's going to happen this week. It'll be next week or the week after. So there's shorter term moves to the upside. Then having a look at gold, so just drop that on the chart. Bullish, absolutely, I like that. It's starting to move to the upside. It's actually starting to trend better. So again, pullbacks into the moving averages looking good, back into resistance, support, resistance levels. All of those are really nice. So gold looking good. Let's see how silver looks. Silver also, but more choppy. So gold is, I have a preference for gold that way. What else here? There's actually even platinum not looking so bad in terms of that. Slightly better, more bullish, but gold preferred. Anything on Bitcoin? Let's have a look. Wow, that's volatile. So best ones so far are the idea of watching the indices for potentially shorting them later on if they keep going lower. Oil looking for longs up towards 42 on both of them. All right, so certainly both of them have that potential, I think, to get to at least 42, even though their prices are different now. 42 is a minimum on both of them, at least based off the weekly retracements. Currency pairs, if cable's looking nice and bullish, then those pairs would be my preferred ones. Any of these, okay, looking nice and bullish if that's the case. And Aussie pairs might potentially be climbing into their weekly retracements. Gold looking all right. So hopefully that assists in some way or gives you some kind of charts to have a look at.